Now, on the data front, the euro area published its industrial sentiment, services sentiment, economic sentiment, and of course, business confidence data for May. That's today. What do the numbers say, and how is the market trading the data?
Well, the market, you can see the German DAX right behind me. Jittery trading again. Of course, Italy and the concerns have not gone away, but a little bit of a recovery, a little bit of an upwards movement, and that has to do with the fact that overall this data the European Commission came out with today came in a bit better than anticipated. The index of business confidence in the Eurozone is lower than in April, but it has not sunk as much at what a majority of traders has expected. The prior reading in April was 112.7 points. Now the index of business confidence in the Eurozone is 112.5, and that is much better than the average expectation. Overall, this piece of data confirms what earlier information had also sort of predicted. You know, purchasing managers indices or indices like the German Business Climate Index, IFO, they all show that there has happened a bit of a weakness in the economies of the Eurozone in the first half of this year, or in the first part of this year. And also, of course, that all those political concerns have come up, the concerns about a trade dispute with the United States. All this is, of course, on investors' minds, but the hard data and the economic situation overall has only declined slightly. So a little bit of hope, I would say.
Thank you very much for this update, Conrad. Enjoy the rest of the day. And in Asia, markets closed lower today as a sell-off in U.S. and European markets weighed on sentiment during the Asian trading session. The political crisis in Italy took center stage, with investors concerned over its implications for the rest of the Eurozone. The Nikkei 225 fell 1.52% in Tokyo, with the banking and non-ferrous metal sectors among the worst performing sectors. The Kospi slid 1.96%. Greater China markets were also spooked. Hong Kong's Hang Seng Index dipped 1.55%. Over in Sydney, however, stocks registered more measured declines. The S&P ASX 200 edged down by 0.48%. And back here in Africa and away from the markets, the African Export-Import Bank is arranging up to $2 billion in financing support to Angola for essential imports. The bank's president, Benedito Rama, said the financing would also support the financial services sector by enabling selected Angolan banks to issue letters of credit to be confirmed by Afreximbank for the continued importation of essential commodities, including food items and pharmaceuticals. And South African retailer and wholesaler Spar Group Limited has reported a 13.8% increase in half-year earnings, boosted by contributions from its European operations. Spar, a grocery chain which also sells building materials and medicine in Southern Africa, says headline earnings per share rose to 541.2 cents for the 6 months ended March from 475.5 cents a year earlier. Headline earnings per share is the main profit measure in South Africa and strips out certain one-off items. Half-year sales rose 5.6% to 50 billion rand, slowing from the 12.6% growth the company reported a year earlier. The board declared an interim dividend of 270 cents, up from 240 cents a year earlier. Still in South Africa, the parliament there has passed a national minimum wage bill by an overwhelming majority, a policy championed by President Cyril Ramaphosa as an important step to tackle labor instability and wage inequality. The measure, opposed by the official Democratic Alliance opposition party, will see millions of workers earn 3,500 rand. That's about $277 a month, and had been initially meant to be introduced earlier in May as part of efforts to boost the economy. The bill will be sent to Parliament's upper house for ratification and becomes law once it is signed by Ramaphosa. And in Kenya, Over 50 civil servants and business people were charged in court in the capital on Tuesday, May 29, after authorities announced on Monday that they would be prosecuted amid an investigation into the theft of nearly $100 million of public funds, a rare move to hold officials to account for a graft in a nation where it is widespread. President Uhuru Kenyatta pledged to stamp out graft when he was first elected in 2013, but critics say he has been slow to pursue top officials. No high-profile convictions have occurred since he took office.
The chief prosecutor on Monday named 54 people. 40 of them government officials are due to face charges on counts including abuse of office and intent to commit corruption. Around 20 of those indicted by the prosecutor appeared handcuffed in court to face the charges. Public prosecutor Nordin Mohammed Haji said earlier the investigation by his office and the police revealed that funds were stolen through fictitious invoices for goods such as firewood and stationery and multiple payments on one supply invoice.
To prosecution, we are looking at recovering the proceeds of crime as well as establishing the tax status of the companies and individuals involved in the crimes. In the meantime, several bank accounts that the funds were channeled through have been frozen. My office is working with the DCI and the Assets Recovery Agency in that regard. As the investigations continue, more suspects are likely to be charged.
Haji said the next stage of the investigation will target the alleged role of banks in facilitating illicit cash transfers. President Uhuru Kenyatta pledged to stamp out graft when he was first elected in 2013, but critics say he has been slow to pursue top officials. Authorities have not charged the official who led the ministry that is responsible for the National Youth Service, where the looting allegedly took place. Kenya's Daily Nation newspaper published a photograph of that individual, who is now the health minister, on its front page on Tuesday with the headline, "The Sacred Cows." On the streets of Nairobi, many Kenyans doubt that the latest investigation will eventually see looted funds recovered or culprits prosecuted.
If the judges will be prudent enough to go through it, maybe the witnesses that will be brought forward to determine if the case has the magnitude, then probably we'll have a positive conviction of those who are allegedly suspected to have embezzled the money. But if it's a PR exercise, then it would be so different, like the other corruption scandals that Kenya has been facing for a very long time. Yes.
Unless we see the big fish given thorough jail terms, for example, 5 years, 10 years, then we will see that the government is really working.
After the break, we'll look at currency markets in Africa, Zambia, as a case study. To stay with us.